Momentum indicators are some of the easiest and most effective tools to use in your technical analysis. The problem is that most people are using them incorrectly. And in this video, I'd like to break down what momentum indicators are, how to use some of the most common momentum indicators, and also how you compare it with our custom entry sniper indicator to find very highly profitable setups time and time again. And guys, if you were looking to bolster your trading skills, definitely subscribe to the channel and tick the little bell. You won't miss a single one of these posts. Without any further ado, guys, let's go ahead and dive on into it. First things first, we need to understand what a momentum indicator is and why we are using it in technical analysis. Just as it sounds, momentum indicators are used to measure the speed and strength of the overall trend of an asset on any given time frame. You could be looking at the daily time frame. Your momentum indicators are going to be a lot different than if you're looking at the hourly time frame or especially the 5-minute chart. You were consolidating the price data from that specific time frame and you were examining the speed and the strength of the trend that is currently at play. Now, of course, it's great to understand what a momentum indicator is, but why do we use them in our trading? Well, the reason that they're so effective is because they give us a great visualization of the volatility of a market. Is an asset overheated to the upside? Have they been sold off too strongly? Is there a big deviation in terms of the trend that is currently at play? We're looking at the rate of change here. We're looking at the speed at which a market is moving. So if we have a trend that is very strong into one direction, we could be reaching a reversal point soon. So the momentum indicators are very good because they visualize this very well. There's plenty of different mathematical models to gauge the speed and the strength of a trend, but that is how we are applying it to our technical analysis. We want to spot periods of time where an asset might be oversold or overbought, and we want to be able to play those reversal points. Now, the momentum indicator I want to look at today is known as the relative strength index, also known as the RSI. This is arguably the most common and simple to use indicator that exists. So let's go ahead and dive into how to use it. The relative strength index is a momentum indicator that uses price inputs to measure the speed and the magnitude of the move that is currently at play. You will first calculate the relative strength, which is going to take the average gain over the certain period of time divided by the average loss. You are then going to put that in the denominator of 100 divided by 1 plus RS and then subtract that number from 100. It is a bit of a complicated process for those who are not math nerds like myself. However, fortunately, the RSI does this equation automatically and you simply get to visualize the data for yourself, which is what makes them so effective. Now, here's what the RSI will look like for most people. We can see the equation has been visualized for us in a graphical manner. And the important thing to note is the 70 level and the 30 level. We tend to believe that anything above 70 tends to be overheated on that given time frame, and anything below 30 tends to be a bit undervalued or a bit oversold, so to speak. So if you have an asset that is setting higher high after higher high, however, your RSI is setting in lower highs, that is what's known as bearish divergence. Essentially, it means that that upward trend is starting to lose its steam and it is becoming unsustainable. We generally will see a trend reversal when we get some bearish divergence, and the same thing is true for bullish divergence. If an asset is setting in lower lows, but the RSI is setting in higher lows, that is known as bullish divergence, and it means that the downtrend is becoming unsustainable. We're likely at a reversal point. So very simply, that is how you can use the RSI. You are able to gauge oversold and overbought territory. You can find divergences within the index compared to the asset's price. You can trade those reversals. It's a very reliable indicator. Of course, you should not use it completely by itself. And here in the back half of the video, I will show you guys how I personally like to use the RSI to find very profitable trade setups. Now, guys, I'd like to break down an example here of a trade setup that I find to be highly probable. It works with longs, it works with shorts, and it takes into account the RSI as well as our custom entry sniper indicator here at Top Tier Signals that is available to every Top Tier Signals VIP member, which you can get your access to with the link down in the description. And you can check out the YouTube channel to learn more about entry sniper as well. Without any further ado, guys, let's go ahead and jump into it. So this trade setup is super great. It's very, very simple, and it takes into account just a couple of things. So the first thing it's going to take into account is the trend that's at play, as well as the strength of the trend at play. So thanks to our trend regression channel, which is going to automatically populate on your chart with any asset, any given time frame, we can see that we are in a pretty broad sideways and slightly downward trend. So if we're moving to the downside overall, we want to be looking for signs that the downtrend is starting to become unsustainable, which means we would be looking for bullish divergence. The second factor that it takes into account is key levels, such as the long and the short zones that are highlighted once again automatically for you with our entry sniper indicator. These are going to show you the areas of support and resistance in the market. So we are pairing the trend, the strength of the trend, as well as key levels in the market. It's a very effective, very simple approach. And so again, we see that we are moving down very substantially. We've stuck in significant lower lows here in price, as well as some higher lows on the RSI. So we have very clear, very clean bullish divergence, and we are finding this bullish divergence, importantly, at a level of support. So we're already at a level where we expect to see some demand And we are getting signs from our indicator that the preceding downtrend is starting to become unsustainable. We're getting that bullish divergence. We're at a key level of support. It's a very, very profitable setup. And you'll notice these little yellow circles here that I've used on the chart. This would represent points to dollar cost average, because you guys will notice this bullish divergence took quite a bit to actually form fully. We went from this low to this low. That would then be your first entry. We went from this low to this next low. That would be a decent entry to dollar cost average. And then finally, by tagging the long zone, you can average your position down, you can set your stop, and you can prepare for what is ahead. Now in this setup, we're using the short zone as the ultimate target here. And I just want to show you guys what happens. So as you guys can see, we had a massive jump up in price off of the long zone. Things are looking very, very good. We're not quite at the target that was initially set. However, thanks to our trend regression channel, we can see that we are now entering what would be the upper bound of a downtrend. Because again, that regression channel is going to adjust as price moves. So you're going to get a good idea of the overall trend at play as it develops in real time. And now that we've gotten to the top side of our trend regression channel, this would be an excellent place to take our profits. We did not get to our full 12% unleveraged profit mark, but we did get to a very, very nice 7.6% unleveraged. If you throw a little bit of leverage on that bad boy, you got a very, very profitable trade. And the key part here is that this is a consistent setup. It's high probability. It takes into account very simple factors in the market. So if you're using a high probability setup and you're getting some nice profits every single time, that is going to add up very quickly for you. Again, guys, you can use the RSI by itself. I wouldn't recommend using it by itself. I would pair it with some other technical factors. Our entry sniper indicator works very, very well for this. And again, if you want to get your access, you can do so with the link down in the description. But guys, that's going to do it for this video. I hope it gave you a better understanding of what the RSI is, as well as how you can pair it with our custom entry sniper indicator. We have a ton of members in the Discord using this indicator every single day and making money, and most of them are beginners. That's the reality. You do not need to be an expert to be able to use these indicators because they are so simplified for you, and it's such an easy way to actually make some money while you're learning how to trade, which is such a rare experience nowadays. You get it here at Top Tier Signals. If you'd like to learn more, please consider joining our Discord. Give the video a like, a comment, subscribe if you'd like. And until the next video, guys, I'll catch you in the Discord. Peace.